gone are the days where you could buy a property and just let it sit there and not do anything and the whole thing, property's passive income. It's not. It's a business.
They're just not going to understand the nuances of helping you get your capital out the UK and into the UAE.
But everything comes back to advice. It's speaking to the right advisor.
There's so many different nuances in terms of what will be specific to you. It's never like a one size fits all, right?
The sales market is almost flooded with a lot of landlords who want to try and sell their assets. And a lot of these clients are sat in, really nice positions where they've paid down a lot of this debt and they've got these UK portfolios that haven't necessarily got a huge amount of debt on them. So one of the biggest shifts that we are kind of seeing right now is obviously UK investors wanting to diversify away from the UK for a lot of sort of obvious reasons. But it's understanding how they're doing that from a sort of finance perspective. A lot of these clients have got UK assets and a lot of them don't necessarily want to sell, especially in the market that we're in currently. So they realize they've got that equity, they've built up in existing properties and they're looking to invest that into sort of high returning overseas markets like Dubai, Portugal, but really still keeping their UK portfolio intact. And the other factor there, I think, is obviously avoiding capital gains tax. Obviously, today we're joined by Gareth from Interlife, specializing in helping investors structure finance across both the UK and the UAE markets. You've been in the UK finance market for over 17 years, and you're the co-founder of Interlife. You sort of specialize the lending team supporting clients across both regions, UK and the UAE. So you're kind of right at the center of this. In this episode, we want to sort of break down for viewers how UK investors are using their existing equity in their UK assets to help diversify into overseas markets, specifically the UAE. The sort of key steps and lending options available for them to do that here in the UK, and also what to watch out for when managing finances across different jurisdictions. There'll also be a link for viewers if you want to explore your own finance options in more detail with one of Gareth's teams. There'll be a link for you to learn more there. Initially, just a little bit of context. So a lot of UK landlords are kind of in this holding pattern. I mean, we manage around 500 buy-to-let properties for clients across the UK. We speak to a lot of landlords on a regular basis. For a lot of them, selling in today's market doesn't actually make a huge amount of sense for them. Even if the intention is to sell, the market and where valuations are don't necessarily stack up. I kind of mentioned it around capital gains tax. They really want to realize and start paying that tax. And a lot of the clients that we're speaking to who want to buy out in the UAE and start a portfolio there, waiting to sell assets means they just miss out on more and more opportunities in the UAE to get started. So Gareth, from what you're seeing from your UK investors, how are investors sort of approaching this practically when it comes to their existing portfolio?
So there's a couple of ways that we're actually dealing with clients on this side of it. It's one, I think you've got to start off with having the right tax advisor behind you. I think that's the most important thing, okay? Is have it all set up correctly, structured, understand what implications there might be as well between having the UK and the UAE. But also, if you've got properties in your personal name in the UK here, these days it's very tough. Let's try to get those properties moved into a limited company. But we're seeing clients do two different things, right? If they're looking at buying out in the UAE, is especially around new build properties out there, the payment plans that are on offer. You don't necessarily always need 25% up front. So where some clients are looking at now is that where we've seen interest rates over the last number of years and that been high, we're seeing things coming down. I think the date is the 6th of November today. We actually have a monetary meeting happening today and we'll find out if interest rates are going to be held or cut. To me, I think it's going to stay the same. But what we're seeing is rates have come down a lot over the last 6 to 12 months. So what we're seeing some clients do is, without necessarily always taking money out of their property, they're refinancing onto a better rate so that they can get a better return on their property. And by utilizing some of these payment plans, they might have their portfolio here where they can take enough money out and just put a payment plan in place in Dubai and effectively without, like I said, taking more money out. It's just using the rental income to fund those payment plans, where they've got a 3 or 4 year payment plan on that. And effectively the next 3 or 4 years, they've bought a property because they've got on the best rate right now.
Yeah.
And they're making the UK portfolio work for them better. We've got other clients where they will rather want to release equity because they've had a portfolio, their properties have gone up in value. As we've mentioned on other podcasts, is that a lot of people here have on an interest-only basis. So what's happened is their properties have gone up in value and they're refinancing and taking equity out and utilizing that to buy in the UAE. just the one thing on that, and it goes back to getting the right advice. It's also the client telling us what their intentions are.
Yeah.
Because some lenders won't allow you to capital raise to buy property outside of the UK. So make your intentions very clear to your advisor at the start, what you're looking to do.
Yeah.
So that he can put you with the right lender.
Yeah. Does that mean it's more of a niche play in terms of refinancing to buy outside of the UK, or is there still plenty of lenders who will look at that?
There's plenty of lenders, but everything comes back to advice. It's speaking to the right advisor. Because a lot of advisors don't necessarily know everything in that space. They'll just be, okay, you're looking to remortgage. And what happens is at the end, they might say, okay, well, we want to see what you're looking to buy. And if you can't evidence that, some lenders want to see what you're buying. Some lenders just want to know what you're doing with it. And it's just having the right conversations. And it's just being honest with your broker at the start, just telling your broker what it is you're looking to do. But there are a lot of lenders that will allow it.
Like you say, in terms of getting the right advice, half the time it's just feeding the correct answers or the right answers back to the lender, right? You know, we see this in all different fields. Some people just assume I work with any solicitor. It doesn't matter when I'm buying a property, but what it does, you know, are they familiar with new build purchases, whatever it might be. So in your case, from the finance angle, from ours as well, we always want to be working with brokers who are familiar with both markets, because we've got clients that are looking at moving capital from UK to UAE. But obviously, if you're just dealing with a UK broker who only deals with UK financing, they're just not going to understand the nuances of helping you get your capital out the UK and into the UAE, which all just goes back to your original point of getting the right advice with the right people initially.
I think if you're a person that's, you know, based in the UK, you're looking at investing in the UAE, you want to speak to a broker that actually understands both markets.
Yeah.
Obviously, I'm plugging my own firm here, but we do. We both here and there, so we cover both. We understand it. We've got collectively close to 80 years of experience under our belt in finance, and we are investors ourselves as well. We don't just do investment funding for people. We actually have buy-to-lets ourselves. We've developed HMOs. We've bought off plan. We understand the processes as well.
Yeah.
And I think that's what you want. It's just that extra little bit of hand holding, especially when you're entering a new market.
Yeah.
It's just understanding a little bit, but yeah.
So I think a lot of the type of clients that we speak to on a regular basis, helping them invest into the UAE on the sort of property side, they kind of fit a similar profile, which is a lot of them are business owners or guys who have built their wealth in the UK. They're maybe in their 40s, 50s. And the first thing they're starting to tune into is, what is my kind of legacy plan here? Or like, what is the plan from a tax perspective? I've built all this wealth. My head's been down busy building all this money. Now what do I do? I like going to the UAE. I travel there. Their family likes traveling there. They can understand the benefits, golden visa tax, and sort of the obvious stuff. And it's when we're meeting with them, we're obviously talking about the sort of the property side, what they're going to buy, but really it's a wider conversation around how they're going to do this. So it's like, am I setting a business up in the UAE? Like, what am I doing with all this existing assets that I've got in the UK? From a finance perspective, like you said. And I think it comes back to actually old school, face-to-face consultation type approach with these guys. And it's not just like, you need a kind of the right network of people around them to kind of pull this off.
It is exactly that, in terms of people all have similar fundamental reasons that they might want to go into UAE, but there's different weightings in terms of exactly what those reasons are. And it's the same in terms of structuring finance. It's never like a one size fits all, right? There's so many different nuances in terms of what will be specific to you. And I think unless people are speaking to the right people, they won't always understand that.
When we engage with a client here, for be it a residential buy-to-let here, one of the first questions we ask client, well, what is the long-term plan? Because what we're trying to do is you're trying to structure the finance for the long term, not just for right now. It's easy for us to say, you're buying your first residential house, just go for a 2-year fixed or 5. Well, what's the next property purchase look like? We ask that question even when a client's coming as a first-time buyer here. What is the long-term goal? So we can structure what it is we're trying to do with them. It's to give accurate advice. And I think we have, we have something here in the UK called consumer duty that we have to follow, where it's just, get a good understanding. We have to tell the client what we can do as well, on the finance side of it. It's just giving the right advice at the end of the day. You know, without seeing a client as a number, see a client as a business partner of your firm.
Yeah.
And that's how we view our clients as well. But I think, you know, the most important thing is tell your advisor what your plan is. Yeah. Don't just, you know, say, oh, I'm going to tell them what I think they need to know. Be honest with them.
It's the same for us in terms of understanding exactly what you said, in terms of understanding the wider investment strategy. And like you said earlier, in terms of one of the problems with the UAE and Dubai market is it has become so transactional, which you mentioned earlier. And what that means is people don't get the right advice about the wider portfolio. So when they've gone into it going, I'm going to buy this one, then I'll think about the next one. For whatever reason, they might not be able to do that because they haven't structured it properly from the start. So having the relationships where you're working with different companies in different areas who are all tuned in to the wider strategy is so important.
Well, I think this is where you guys add a lot of value, is that you've brought in the right partners into your business to support your clients. And by having the right accountants, tax advisors, the right mortgage advisors, is you adding a lot of value to your clients because you've done your due diligence on those firms, and you giving your clients a, you know, not a one size fits all, but a one-stop shop, I should say, where you're saying, we can do that, but these are a curated pool of people that we can know that actually are working for your best interests, not just once-off, because ultimately you want your clients to buy more property. I want my clients to buy more property. And if we work together with the client on that, everyone's a winner.
Yeah, well, everyone.
Yeah, but one of the things that I definitely see a lot speaking to our landlords we manage at the moment is there's, especially ones who want to get and diversify out of the UAE, they are kind of stuck in the sales market right now. The sales market is almost flooded with a lot of landlords who want to try and sell their assets. And I think that's where the finance piece, I think, piques their interest the most. If they've got buy-to-lets with tenants in situ trying to sell them, do they serve notice on their tenants, potentially incur, you know, a void period trying to sell 6 months later, offers don't happen, it's the asset sat there, that's been a bit of a disaster, tenant goes back in there, right, I've not got any money out of, you know, this process. And a lot of these clients are sat in, you know, really nice positions where they've paid down a lot of this debt and they've got these UK portfolios that haven't necessarily got a huge amount of debt on them. So I guess that's where the sort of finance piece comes for them to because a lot of them aren't necessarily unlocking those funds to buy more UK real estate. But obviously being able to unlock that capital to reinvest it into the UAE, I guess that's where that finance piece becomes attractive. And then obviously the capital gains tax situation as well.
Yes. You know, one of the things we see a lot of is because we do a lot of mortgages for international clients, especially buying in the UK. And our international clients that buy here have a different mindset a lot of the time to what a local landlord does, where they almost sometimes forget about the property. They're not keeping up to date with the values, and 5 years come by and they haven't realized that there's quite a significant amount of equity in their property. So it's being able to identify those opportunities where, as I go back, you know, having the right tax advice at the start is something very important, but keeping an eye on your portfolio, understanding it. This is one of the things that I say to clients a lot is a property, gone are the days where you could buy a property and just let it sit there and not do anything, and the whole thing, property's passive income. It's not. If you set your properties up, and a lot of people these days will buy in a limited company, it's a business. Run it as a business. Understand your business and maximize your business. There's a lot of things you can do. You know, there's tax efficient ways to look at debt. But if you're buying through a limited company, run it as a business.
Yeah.
And that's the thing. Take the time to put into it, to understand it. And if that's upfront, but do keep up to date. One of the things we work with a lot of our clients about is just changes that are happening within finance over the year. And we keep our clients up to date with, you know, just rate changes. We've got clients who are investors and we've got their portfolios on file, and we actively look through them and say, well, actually rates have become better now. There's an opportunity to release equity, even if there might be an early repayment charge. And sometimes clients look at this and they get put off and they think, oh, I've got 2 years to go on this, otherwise it's going to trigger this early repayment charge. But actually, if you that early repayment charge, it might be worthwhile triggering it now, because you can buy that next property at the right price. You can do what you want. You can increase the value on it. You can start actually making an income on that. So
opportunity cost.
It's a cost right now, but it's going to get you to where you need to be a lot quicker. And that's just how you view debt and how you view cost.
Yeah, it's your view on debt, isn't it? Some people, I think, who aren't as educated just think debt bad. I don't want it. My own family, we have my father, my uncle, and quite large portfolio of commercial and residential property here in the UK, and they've over the years they've used debt really effectively where they need to. They know they've got a big tax bill coming, inheritance tax bill, so their relationship with debt has actually helped them a lot build their wealth over the last 30 years. I think it just depends on, like you say, your relationship and how you look at it.
Going back to one of the original, what we're chatting about now in terms of those business owners who may not want to sell, like Tom said, for, in terms of market conditions, they want to diversify their portfolio into the UAE, brings on to the point of getting financing on corporate structures. Does that differ at all in UAE versus UK? So if you're a business owner here, you own your property in a limited company structure, and then you perhaps opt to purchase property in a corporate structure in UAE, is getting finance straightforward as it is for getting it personally, or does it differ?
There's not much lending in the corporate space right now in the UAE. Most of it's in personal name, just because tax-wise, there's no real difference as such. But we are seeing things change. We are seeing a few more lenders looking at this now. But it's one of those things I would say, have a chat with us about it and we can explain it to you. But just from that, you're incurring additional costs by setting a business up in the UAE, where it might cost you £50 to go register a business here. It's significantly greater out there. So sometimes it's those upfront costs that put people off, and that's why they'd rather go do it through just in their personal name out there.
Yeah, you don't have the same motivations in the UAE that you have here for putting it in a corporate structure. But we've definitely spoken to some people that for whatever reason, some advice they've had is to actually keep it in a corporate structure. So I guess fine. The answer there is that it's fairly early days for lending on corporate structures because there's just less of a requirement for it.
Exactly.
Thank you, Gareth, for coming in. All your insights, really useful. If you're watching and you do want to find out more information about using finance effectively on your UK assets to buy overseas property, there'll be a link below. Click the link and you can learn more.